All right, everybody, let's go over this spreadsheet real quick. So this is the spreadsheet for the public credit spreads. Uh, it is in a table format, and right now I do have a filter going that's keeping them all in a dated order from when they were opened until the newest one opened. From that, we can also go over here to the running side, and we can tell this to show things that are no longer running, so trades that are closed. And or we can do it the other way around and say only show the trades that are running. So these are the trades that I've closed out. Again, this is a very new account, so there's not a lot of trade history here, but this is how I trade credit spreads. I build positions in them just like I would in stock, and I just let it play out, right? So if a trade needs to be adjusted, we do it for a credit, basically rebuilding it with a one-to-one and hitting a reset button. We don't pay to make these adjustments. We get paid to make the adjustments. You can see that in these trades, I was making them near a one-to-one. So opening up, a 50-cent wide trade for 25 cents, or in this one, I got 1/3 the width. It wasn't working out too good either, which is why the trade was closed really early. Same with Twitter. Twitter broke through support with some negative news. That negative news suggested that I should just close the damn trade down. It ended up stabilizing anyways and coming back around. But the one thing that can really hurt these trades is an outsized move, something that looks like February. Now, I really don't expect things like that, but airplanes fell out of the sky in Boeing, and look what happened to Boeing, and it took a long time for Boeing to come back. I wouldn't want to get stuck in a trade. It doesn't matter that maybe it's only a $50 trade in Twitter. I still wouldn't want to be stuck in it for a year waiting for it to come back, right? So I killed that trade in Twitter. I killed the trade in GM, but they were still profitable. That $6, hey, it covered the commissions, right? It's the idea that, yeah, the trade didn't work out, but I didn't lose money. Okay, the same thing with that GM. We were risking more than this is worth, right? So it's the way it goes. These smaller trades though, like this Wells Fargo down here, it's $16 of profit. That's more than the 50%. Okay, so these can be scaled up. Of course, I'm not running a really large account, so the trade that you put on as you're learning how to do these on your own, scale up, scale out, get more of them. It doesn't matter to me on my end. It matters that you're building the trade correctly and you're getting the right price. If you're not filling these with the price range that I'm going to be pointing out, then you're putting on more risk than the trade is probably worth. And that's why you want to pay particular attention to the strikes that I use and the amount of credit that I'm getting. And when I make a roll, that I make a roll for a credit, a particular credit number, and I'll be pointing those things out. But this spreadsheet is the running trades right now. All trades is right here. You can see where I have 2 Netflix trades. Well, it really isn't 2 Netflix trades. What it is we had a trade and then rolled the trade into something else. Right? And you can see that right now the current trade, we are risking 252 in a $5 wide trade. It is still running. Now the profit tab, even when the trade is still open, that darn thing is showing it there. So maybe I need to come up with another name for that. That's not profit until the trade is closed. Right? Just if you're new to credit spreads, you really got to grasp that concept that it's not your money yet. Just because you collected the credit, it's only yours after the trade is closed. And if we go back in here and we turn off all of the ones that have been profitable, that is profit right there. Okay, but when we're showing everything, I'm not really great at running these Excel sheets, so maybe I could go in and figure out a way for it not to show profit on things that are not yet closed, but I don't. It'll work for my purposes. Okay, so perhaps this should say something like anticipated profit, or I don't know, something. But you can see how it's easily filtered. We can go in, and all of these don't need to be filtered, but we can check days to expiration. So if we're worried about, what trades do we have in December that are going to expire, we can go in and look at that. If we wanted to know, what trades we have in October, and of course we're done at that point. We had that one Netflix trade, and we're out of October, so obviously that's no longer an issue. But by having these tabs across the top, we can go in and choose to see what we want to see, which ones are needing to be rolled by date. We can just go in and check that easily. Now, I deal with these accounts all the time, and this small amount of trade, this is nothing. I'm keeping track of a lot more than this, and so for me, I'm looking at these every day. But I think that a spreadsheet like this would help you guys that are not journaling your work. You're not keeping track of your trades. And so I'm going to be sharing this spreadsheet. You can also see that we are running, well, I am running this AMC premium trade over here. Now, look, guys, AMC is not a great company to go out and sell premium on. I did this so that in another video series that I'm doing, I could teach people how to trade premium in something really small. And if they screw it up, hey, they're going to lose $4, right? I would rather teach somebody how to do that strategy, and when they screw up because they didn't do it right, they lose $4 instead of 40 or 400 or 4,000. All right, so yeah, I could have picked something way better to sell premium on, but AMC is safe, it's easy, and it's rallying up really nice off the lows. It makes for a great learning tool. It's in this spreadsheet, so you'll see it anyways. The other thing that is in here right now is this VIX trade. This is the hedge that gives us the confidence to go long in this market. I know everybody's scared about a market falling like it did in February, but we can't sit out of the market just because we're scared of another downturn. We carry a hedge like this, and if the market does make an outsized move and kills all of these trades that are live, hey, we'll make our money from this instead. Which means, yeah, hey, some of those might lose, that they just might not be able to be rolled, but those losses are going to be offset by this one single trade. And if we don't take that kind of fall, once we've made $300 in profit to pay for this hedge, then we're just carrying that hedge for free. All right, so that will always be in here as well. And if I make any updates or adjustments to that hedge, you'll see it. It's right there. So the premium one, it's going to be updated. You can trade it or not. I'm not encouraging you to do that. It's just in there. Okay, it's not really for you guys. If you want to use it, you got it. Until the selling premium videos come out, it's probably not going to make a lot of sense to most of you who don't sell premium for a living. Your focus should be on trade records, and if any adjustments are made here in the VIX. And I wanted to do this video so that you understood how to use this spreadsheet. So what I do is I write how wide it is. Was it bought to open or sold to open? So you know what strikes we're dealing with. And these are all put side credit spreads. We don't do this on the call side. At least I don't do it on the call side. Mainly because if I needed to make an adjustment and move up as the chart was running against me, I could run all the way to the moon. The price could continue to chase me all the way to the moon. But if we go long and the market falls, we expect that market to sooner or later find a support, right? Because we're trading good markets. So these are all puts. We got the buy to open, sell to open, how wide I made the trade when I built it, how much credit I collected for the trade, and if I closed the trade, you'll see a debit. If I did not close the trade, if the trade is still open, then you'll see no debit there. You'll see how much we risked. And of course, in this trade, you can see if I've got a $25 credit and I'm risking 25, then it's obviously a 50-cent wide trade. The trade over here is easier to read than these. Okay, but I have those in because the spreadsheet can be used later on to do tables and graphs and all kinds of crap like that. And so it needs that data broken out. But I like to be able to just see it at a glance. So I made the trade column here, and I can immediately look at this and see what I'm dealing with. I've got a 250 wide trade and I collected $1.25. You know, I've got a $1 wide trade. I collected 47 cents. Just like that, I can immediately see what I've got. Okay, so these are the trades, guys. This is the spreadsheet. I just wanted to make sure everybody understood how to use it. That you got filters across the top, and you know, if you break it, throw it away and come back in and download another one. All right. That's it, guys. I appreciate your time.